All right, one comment we've seen from financial advisors recently regarding potentially learning about Bitcoin and crypto and potentially helping their clients invest in it is that it seems difficult to put your clients into an asset that's already appreciated this much, it's already gone up this much. And I wanted to address that. Yes, we've seen the returns of Bitcoin. Obviously, if you look over its history, it's infinite returns because it started at zero. Even if you look in the last year, you have crazy returns. And so financial advisors are going, am I going to put my clients into this asset knowing that it's already had this big growth? Isn't it due for a downturn? And to do that is to say, I don't understand what the future value prospect, the future investment thesis is for Bitcoin or for any other crypto assets. And the idea here is Bitcoin is a different animal. It's not there anymore for you and your clients to try to make 10,000% returns or 100,000% returns or turn $1,000 into $1 million. That prospect for the most part is not there. And honestly, that's not your role as the financial advisor to find those. Your role is not necessarily to speculate. Your role, I think, is to understand the value of the asset, where it fits into a portfolio. So take something like Bitcoin that has this store of value inflation hedge idea because of the fixed supply of 21 million and go, okay, does this fit? Going forward, do we need something like this in our portfolio? Do we need something that is a store of value and inflation hedge? If you look across your client's portfolio and you go, look, we need something that's maybe non-correlated. We maybe need something that is a store of value that has a fixed supply because maybe I have clients that are going to retire in 10 years and they know that their expenses are going to go up after those 10 years, especially with inflation, especially with the money printing that's been going on. Or maybe I have clients whose kids are going to college in 5 or 6 or 10 years, and we know the inflation rate of the price of sending a kid to college. So maybe do they need something in their portfolio that is a store of value? And then you start looking over the store of value potential assets, things like gold, real estate maybe, and does Bitcoin fit in there? And that goes to, and I'm not trying to make the case for it, but to say it's already appreciated so much and therefore I'm not going to put my clients into it says, basically is going with, I don't fully understand what it means. And the only reason to ever get into it was to have these huge gains, this huge appreciation, is to say, maybe there's a different place for it in terms of allocation going forward and understanding the prospect from here, because you have to look at the gains up to this point, kind of like a tech startup going from zero to a public offering. And you weren't necessarily able to get your clients in early. You weren't able necessarily to get your client in the VC rounds or the angel rounds or anything. So imagine getting your clients in now when it is essentially publicly offered. What are the prospects of Bitcoin as a store of value? What are the prospects of ETH as a new technology and platform? What are the prospects for owning that inside of a portfolio? What are the risks? Where does it fit in the portfolio? Is it in the alternative sleeve? Why are we trying to invest in some assets like this? And to me, it doesn't make sense to look back and go, well, the returns were so high, now we're not going to get those returns, because of course we're likely not going to get those returns anymore, but we're also not speculating anymore. We have, an ETF approval imminent. We probably have an ETH ETF approval sometime in 2024. So understand then what's driving the value, how to keep the asset safe and secure, why they might go up, why they might go down, what the risks are, and therefore where it fits in the portfolio from today forward is important because we're not going to look back at previous gains and go, that's what we're trying to replicate. What we're trying to do is say, does this fit somewhere within the portfolio? Yes, it could be somewhat speculative, but now again, we've taken some of that speculation out because we are having these TradFi, this institutional investment coming in. We are having ETFs. We are having more large companies, large banks, large custodians, institutions look at crypto technology, blockchain technology to utilize. And so from your perspective, again, you're not trying to get your clients those monster gains because they're not willing to take the risk and you're probably not willing to take the risk. But now it's much less of a risk. Now ETFs start getting approved. Once the government starts to thaw, once we see more adoption all over the world, which is exactly what we're seeing, now does it make sense to start putting your clients in crypto assets, which means going back and understanding how they work, understanding where the potential value is, how you might look at the value, and most importantly, how you might look at it fitting inside of a portfolio, inside of an allocation. So looking at it and going, well, they've already had these big runs and they're not going to have them again. doesn't make sense, because part of the reason why they've had these runs is because there is more adoption, is because more and more people are using them. And so for your understanding as a financial advisor, where do we see this going from here? Where do we see it going from today forward? And do those investment theses fit within a portfolio? And then figure out, where do I fit? Where does the advisor role fit here? Is it helping them with security, safety? Is it helping them with wallets and self-custody? Is it helping them find a custodian and a way to manage it inside of their portfolio, SMA managers? Or is it to be going with the ETF to just get exposure to the asset such that your clients might need that inflation hedge, that store of value in the future, and the value of the ETF should go up the value of the underlying asset? Those are the kind of things to look through, because at this point, we're not looking for those types of gains necessarily, the $0 to $45,000 Bitcoin. Now you're looking for, okay, at 45, where do we go from here? And to me, that's the role of the advisor, is to understand it enough to go, where does this fit in the portfolio based on, do I think this will go up? Does my client think this will go up in value, but not monumental gains, but gains that fit within what they have and their goals and needs of their portfolio, gains that fit within, and risk that fits within their profile, their income, their assets, their needs in the future. And to me, that is your role as a financial advisor, is to understand where we are from here going forward, and where something like crypto might fit, regardless of what gains it's had in the past.